In this video here, I'm going to be doing a stock analysis on Uber. You've definitely heard of this company. You know what? You're probably watching this video within an Uber right now. I'm going to look at the fundamentals, the financials, and finally do a price analysis to determine a fair price to pay for this business. If you're new here, my name is Leo. Welcome. My channel is dedicated towards all things investing, so make sure you hit the subscribe button, and anything that's mentioned in this video will have a link down below in the description. So without further ado, let's jump into Uber and let's see what this company is actually worth. Alright folks, so we have Uber loaded up here in my very own stock research tool. This helps me to analyze companies in seconds. We're going to look at three different things here, folks. We're going to look at our company metrics here, which is a comparison from where the company stood 5 years ago to where it is currently, and where we can try to gauge of where it's going to be going. Then we'll move on to our financial evaluation score sheet, and then finally we will do a price analysis. I'm just going to get rid of those numbers here. That's from another evaluation. So without further ado, let's jump into our company metrics, and here we can see where this company currently stands. So the company hasn't been public for very long, so we're not going to have that many 5-year numbers. So for one, our 5-year PE ratio, we don't have that, but it's currently sitting at a negative 114. Not too great, folks. We're also in the negative with our EPS from the both 5-year and current side. Same with return on equity, profit margin. So 4 categories right off the bat. Not looking too hot for Uber right now. Our revenue so far is at $17 billion, and we'll see how that compares once we jump into our financial evaluations. But because of that, or with that rather, we have negative $496 million in net income. Our free cash flow for both the trailing 12 months and the 5-year average is both in the negatives. Our return on invested capital is in the negatives from being negative 12, and comparing to our 5-year average, we're at negative 20. So, I mean, a slight improvement, but negative nonetheless. Our Allman Z-score is somewhat concerning, very concerning, because we're sitting at a 1.02, folks. We want this number to be over 3, and we don't have that, and that 1.02 number is indicating to us that Uber is in an area of distress. So something to keep in mind. Our Piotrowski score is also 2. We want this number to be between 7 and 9. 9 is our highest number that we could possibly score in the Piotrowski score, and we're sitting at 2. This is incredibly poor. So, with the company metrics out of the way, I'm going to say this is a company that, to be honest, I don't know how much more I could dig into this, but I'm not too impressed. But I will go through the financial valuations, because this is the other factor here that I would look at to see if it's worth even doing a price analysis on, or it might just be to avoid it entirely. So, with that being said, let's jump into our financial evaluations category. And that's our list right here. We are scoring this at 2 out of 10. I'm not too thrilled about that number at all. And to be frank, this is a company that, frankly, I would just not even look at and avoid. But for you, my lovely viewers and subscribers, I will go through the entire thing for you. Because listen, you want to know where this company stands, right? And I'm going to provide you that information. With our 5-year PE average of being nada, because we don't have that number currently, and also it being negative 114, we're going to get 0 points over here. Now, current ratio is sitting at 0.98. We want this number to be 1.5 or higher, folks. That means they would have enough assets on hand to cover any liabilities. We don't have that. So that's going to get also a 0. The only 2 points that they really score with me is on their 5-year net income growth, because they're growing that number, as well as their 5-year revenue growth, which honestly, the only redeeming factor here is that the revenue, yes, it's growing, and even though their net income is growing, it's still in the negatives. So this should just be a 0 as well, but it's a point nonetheless. Continuing on with our list, I'm sorry for that sidestep. Our return on an equity average is negative 39%. We want this number to be 15% or higher, folks. We're not getting that from Uber. EPS growth is also down, and debt to equity is high at 75%. We want that to be under 50% because we want them to be leveraging their capital through equity within the business and not through debt. This indicates to me that they're growing the business through debt, and we never want to see that with the business, guys. We never want to see that, and unfortunately, that's what they're doing. Now, with our share dilution, we are getting slightly diluted at almost close to 3%, folks. Something to keep in mind, that number there is it's eating away at you, the shareholder. So just keep that in mind, folks. We want this number to be decreasing or staying the same, but ideally decreasing. And this slight percentage over the last, well, this company's only IPO'd in 2019. It's something to definitely keep in the back of your mind. Free cash flow growth has been decreasing over the last 5 years, so that is not good. Like, let's see what are our current numbers at. This is the last reported free cash flow for 2021, and then yeah, it is a disaster, guys. It is just an absolute disaster over here. Not looking too great on the free cash flow side, as well as our return on invested capital average is a negative 20%. We want this to be 10% or higher, and unfortunately, we don't have that. So 2 out of 10 is our score here based off of Uber. This is a company, I'll tell you right now, folks, I wouldn't go any further with this, because it's just a company that's not making any money. It's diluting you, and they don't have enough assets on hand to cover any other debts, as well as they're growing the business through debt. So it's going to be really hard to do a price analysis, but nonetheless, we're going to jump into it. Here's a price analysis, and if you're liking the video so far, folks, hit that lovely subscribe button, which is down here. I believe it's down this way. So hit that lovely subscribe button and the like button. It helps me out a lot and makes me feel warm and fuzzy inside. So with the price analysis for Uber, there's a lot of numbers to be playing around with, and if you know me, I always like to try to be as conservative as possible, because I want to try to assume the worst and expect the best for this company. So we're going to do a 10-year analysis. Now, it being growing over the last 1 year at 56%, 41, and 51 over the last 10. Oh, this is a 10. Obviously, the 10-year number is just based off the last 5 years that it's been currently as a company. I mean, do I have the 10-year numbers out of curiosity? We can date back as far back as 2016. This is before it's obviously gone public, so that'll be expressed in this number here. Now, that being said, I have to go super conservative. I'm going to go on the 25. And this kind of, my last video, I did DocuSign. It's going to feel somewhat similar. So I'll do, maybe I'll do 35. Why not? Profit margin. So yeah, this definitely feels like DocuSign, because I'm going to be speculating a lot of different numbers here. At least with DocuSign, there's a lot more positive numbers, but I don't have anything. So with the profit margin, I'm going to just flip it on its head and go 10, 15, and 20. Free cash flow margin, I'll do the same thing, 10, 15, and 20. With a price to free cash flow of being 14, 16, and 18. And then finally 14, 16, and 18. Now this is going to probably show that this company will probably be a buy once I put my desired return in. And yeah, it's going to show a super high outcome of being $275 on average, 500 on the high side, 89 on the low side, and 235 in the middle. Now, does that mean you should go out and buy Uber? Probably not. This is a company here that hasn't made any money yet, folks. So this is just going off of speculation that, hey, by tomorrow, it's going to make 10% profit or 10% free cash flow margin, and it would justify this $90 price tag. At the current price of $29 and haven't been able to make money in the last 5 years, this is a business that like I said, and still stick by it, I would avoid like the plague until there's some positive numbers, and there's a lot of debt that I have to get rid of. This is awfully, yeah, honestly, if you watch my DocuSign video, I somewhat feel the same way about this company that I do with DocuSign, but these are businesses that are fairly new. They have to be proven, they have to prove themselves on the market and at least generate some positive free cash flow numbers. Unfortunately, I mean, they did get hit 2020 due to that, you know, lovely pandemic that we're all going through. So people weren't going out as much, but now, I mean, there was definitely a slight increase in stock price over the 2021, and now it's slowly been on this decline, and it's probably for the best because I have no idea how to justify the 29.27 price it's currently staying at right now. Now, if I go super low, out of curiosity, if I go 5, 6, and 7, right? I'm gonna go 5, 6, 7. That's ooh. No, that's real ugly. Let's go 10, 15, 20. I'm conservative, but like I'm not that crazy. Free cash flow margin. Let's go with that 5, 6, and 7. So now this is being a lot more. I guess this would be a lot more accurate because look, we're in the negatives here, folks, and this is just slightly going positive. This is something that we just don't have. It's expressing 30. So I mean, look, if you believe these evaluations here, could very well be a buy for you. But I need to see some more positive numbers. Simple as that. My thoughts on Uber are simply that. I need them to just be more positive. It's totally mispriced. Avoiding. Anyways, guys, that's the video. If you like it, hit the like button down below. And if you love me, hit the subscribe button. No other ways about it. Do the 1 and 2 punch combo. I greatly appreciate it. If I'm going to go out and party, like they're my go-to company to call. So listen, companies come clutch in a lot of different aspects of my life, but unfortunately, as an investment, I can't justify it. But remember, this is all just entertainment. You have to do your own due diligence. If you're interested in obtaining the software that's in front of me, send me an email and a request, and we could definitely work something out. If you want it, it's also be in the description down below. But that's probably be a better spot for it. It's invicticamedia@gmail.com. That's invicticamedia@gmail.com. I gotta get a little sales pitch in there for you. So with that being said, folks, I'll stop rambling. That's the video. I'll see you in the next one. Leave a comment down below your thoughts on Uber and any other companies you want to see evaluated. Thank you.